there's a fairly strong emerging narrative around inflation, and it seems to be relatively misunderstood. And obviously, I think people understand what inflation is in general terms, but in relative terms, everybody who goes to the store sees that food prices are higher, and when they go to the doctor, medical bills are higher. But you can buy a really nice TV for next to nothing right now. So, in terms of the inflation narrative, just give us perspective on why it's so important for the Fed to generate inflation and what they mean by inflation.
The overarching principle that makes the whole inflation thing make sense is prices go up on the things that people are buying. Plain and simple. So you've seen recently prices of household supplies go up because people were stockpiling household goods. And so the prices went up. You've seen the prices of healthcare go up because Americans are seeking more healthcare. You've seen the prices of assets go up because everyone's buying financial assets. So part of it is just looking at the basket. The broad consumer price index basket contains a lot of items that consumers haven't really been buying and are oversupplied. Mm-hmm. So inflation has been, kind of mum, nothing really to speak of. And the Fed, with their dual mandate, so they are supposed to achieve full employment and stable prices in terms of inflation. The problem is they've set an inflation target of somewhere near 2%, and they have failed to meet that target since 2008. So that's, that is their mandate. That's what they're being judged on, and they're just failing consistently. And now you think of their typical tools that they think would generate inflation, which would be lowering interest rates. Interest rates are already at zero. So you're not achieving your goal, and you've run out of the one tool that historically was used to achieve that goal. Mm-hmm. So that is why the Fed is so caught up with this. And it's not just the Fed, it's every central bank. Right. Is failing to generate inflation. And these are due to dynamics that, we outlined in detail with solving debt with debt. Right. And that the world is in this deflationary over-indebtedness dynamic that is really just feeding on itself, and there's not much the central banks can do. Right.
And I guess one question we get a lot is from people is why is inflation even important? So some people like deflation. They don't like it in their incomes, but they like it in other things because it helps them de-lever.
Yeah, if the U.S. economy had a dynamic where everybody's wages were going up, but the prices of goods were going down, so inflation in wages and deflation in goods, that would be great. Those things just rarely, if ever, happen at the same time, because anybody who's selling goods, they're paying wages. And mm-hmm. If they have to raise wages, then they have to raise the prices of the goods they're selling in order to maintain their profit margins, or else they go out of business. So, the reason why everybody worries about deflation is because that typically means wages aren't going anywhere, or maybe even wages are going down, and the prices that producers are willing to sell goods at are going down, which means they need to further reduce wages and lay off more people. And then also the value of debt gets harder to pay back when your incomes are reduced or you're in a deflationary environment. You inflate your way out of debt. You deflate your way to bankruptcy. That's how that situation works. And we know the globe has a tremendous amount of debt. And when you have a lot of debt, inflation is your friend.
Right. And speaking of bankruptcy, give us an update on the zombie company list and where that stands.
So it was still tracking right around a third of the companies in the Russell 3000, which measures almost all of the publicly listed equities in the U.S. are currently quote unquote zombies, meaning that they're not generating enough earnings to cover the interest on their debt. Hopefully they get a recovery in earnings here and they're able to refinance their debt and work their way out of this dynamic, sort of de-zombie themselves as the economy comes back and hopefully the virus situation clears up. But more likely than not, what's going to happen is, we view a lot of those zombies as future bankruptcies. Mm-hmm. And bankruptcies, a surge in Chapter 11 filings typically follows the business cycle at about 4 to 6 quarter lag. So we would be looking at mid to late next year, 2021, is when we would expect the surge in bankruptcies to happen at the corporate level. Small business bankruptcies, a lot of them aren't going reported, but we know anecdotally those are very much on the rise.